SBI, and overall it's been a mixed quarter one for SBI. Slight miss on NIMs and net interest income is what we've seen, but it's been a healthy asset quality that has boosted growth this time around. So all in all, mixed set of numbers coming in, and in fact after the word of coming in from the management, we've seen a slight bit of a recovery in the stock right now, marginally in the green. That's why the stock has inched back right now, wherein Mr. Sethi just said that the ROE goal is to be around 1% and ROA expected to be around 1%, and ROE the endeavor is to be around 15%. So those are some of the targets that the bank has given, and on that note, the stock is climbing up as we speak. So good recovery is something that we've seen in the stock as well. But while we are talking about earnings, it's also numbers that have come in from Grasim. And that stock has been in focus, and that stock was slightly under pressure too. That was the other Nifty company that came out with its earnings, and well, yes, all eyes are going to be on Tata Motors when those numbers come out. So in fact, we have lots to talk about, lots to chat. Let's welcome on board our guests for the day. We have Mr. Dhananjay Sinha, who's joining us on the show, and let's get a better sense of the kind of numbers that we've seen so far. And Mr. Sinha, hi, and good afternoon. Thanks so much for your time. Give us a sense on what you are making of SBI's numbers. What's your first read through here?
There has been a sort of a pressure as far as the margins concerned. That's kind of an expected thing, and I think the net interest income is also kind of flat on a year-on-year basis. So I think they have been able to generate operating profit by relying a lot on other income and also curtailing a certain amount of operating expenses. So there is a certain optimization that's happening, and also the fact that uh, uh, they made trading profit also, so that's contributing to the other income. So that's broadly the situation. Of course, there is a positive surprise with respect to the asset quality, the provisioning, etc., which has been moved up a little bit, but generally asset quality numbers look to be okay. So I would say that there's nothing, there's no negative surprises here by and large. I would say the trend of flattening NII is something that has been shared by other banks as well. So I think the pressure on spreads, etc., has been there. RBI has cut rates and stuff, so things have to be looked at from a future perspective. But I think as such, on a standalone basis, the SBI number looks to be, matching the market expectation. There's no negative surprise there.
Surprise is indeed taking the stock higher, and yes, of course, SBI remains to be one of the few stocks holding in the green within the banking space. But Sharon, why don't you help us with the chart reading as well, because with this up move, the stock managed to move above that 800 odd mark. What's your read through here?
So, Srishti, I think a decent commentary from the management. The stock has recovered from its days lows of around 790. So, good recovery. Market is giving a thumbs up. But again, I don't see that kind of upside. It has a strong resistance between that 825 and 830 mark. Unless and until it starts moving or trading about that level, I don't see any meaningful upside coming in the stock. The stock has a habit of going in a sideways consolidation for very long periods of time. So we'll have to wait and see. But the stock is moving still pretty well, given that Nifty is almost trading at day's low, Bank Nifty also at almost at day's low. On that front, it's still good. But again, a small resistance in the next 15-20 odd rupees. So we'll have to wait and see and review it if it starts moving about that 830 odd mark.
So those are going to be the next levels to watch out for SBI on the chart. There's been no effect of that on the Nifty PSU banks or the Nifty banking index right now. In fact, almost on the Nifty 52, we're very close to the session low right now. A 0.7% cut is what we've seen. 24,420 is the level we are at right now. Let's slip into a short break and talk more about the markets on the other side when we return.